Hey guys, Barry Page with Legacy Money, and I've got a great show for you today. I tell you, it's really, as you know, been a crazy year this year. A lot of changes going on in our economy with our government, and a lot of uncertainty out there. And close to home here, on the Gulf Coast, there's been tornadoes, floods, and just this morning, I was reminded how important, though, things can be. When I came into the office this morning, the office was flooded. We had about 10 inches of rain last night, and the day wasn't looking very bright. But once I waded through the mud, I checked some messages and looked at my day, and I found a message from someone that I've worked with, and it really just changed my perspective. They told me how much I changed their lives forever, and I tell you, it just sunk in. So I want to share with you a few simple things that you can do to make sure that you're prepared for the unexpected, to make sure that your family is protected and your money is protected. So in this episode, you're going to discover how you can build your foundation so you're prepared when life happens. How you can get clarity on what's really important so you can stay focused knowing the end result. And how you can maximize your efforts with efficiencies so you and your money are more productive. So let's cue the intro and get started. My mission is simple: to help you protect your family and keep more of your money. I'm here to help level the playing field for families and those who seek the truth. There's always a new way to make money, but at the end of the day, it's your family's security and your legacy that matter. And I promise to help you protect what's really important to you. Legacy Money starts now. So here's some real tough questions. Are you prepared for the impact of another storm, shutdown, or market crash? Is your family protected in the event of your disability, long-term care needs, or even premature death? Is your money protected from onerous taxation? And ultimately, is your legacy important to you? We're going to cover these tough questions and what you can do to make sure that all of these things are covered and your foundation is solid. So in the event any of these things happen, you, your family, and your money are protected. So we have to start with the foundation. Any builder knows that the foundation has to come first. It is the most important piece of the puzzle when you're getting started. We have to have proper insurance, a well-constructed will, possibly trust, and our assets must be protected correctly. We have to focus on protecting what's really important. Okay, so we can get really detailed, but I'm just going to give you the big picture here. I think most of us understand we should have insurance. We need insurance to protect our automobiles, to protect our homes, and we need a liability protection. Could be a separate policy, it could be the same. We need health insurance, we need disability insurance, we need long-term care, and we need life insurance. So these are all needs. We all know we need these things, but it comes down to our own decision in many cases. Let's take a look at automobile insurance. Most people buy this with the idea that they're protecting their automobile and their finances should they get in a crash. And indeed they are. But really, who is it protecting? Before you can get an automobile loan, somebody forces you to get insurance. and that's the bank or the financial institution that might be loaning you the money. So is it set up correctly? Is it set up to protect you, or is it set up to protect the institutions, the insurance companies, the financial institutions? So just think about that. Homeowners insurance. Typically we think of fire insurance, but where I live, you have to have separate policies for floods, hurricanes, wind, hail, things of this nature. So we all know we need homeowners insurance, but many times, like automobile insurance, it's set up to protect the financial institutions and not us. So let's just take a quick look at those two. Most of the time, people want to get a low deductible and they want the least expensive insurance possible. But what they're really doing is they're putting the insurance company in control. They like it when you have a low deductible because your premiums are higher. So oftentimes we may be able to offset the cost of having a higher deductible by having a savings plan in place that would cover that deductible first in the event that there were an accident, but also to keep our premiums low and create some efficiencies there. That way we can focus on the liability side of that insurance. We need either a umbrella type policy to protect us in the event of liability, or we need the maximum amounts of liability that we can get on those vehicles or our home in case someone were to get hurt and there were possibly a lawsuit. So very important to have your insurance coverage set up correctly. And health insurance, that's been a big topic in recent years. Obviously, who should pay for this? The government, our employer, us? Well, we all know we need it. So it's just a matter of protecting ourselves, having it set up correctly. You want high limits if you have to buy it on your own. The deductible thing works the same here. If you can have a higher deductible, your premiums will be lower, because we all know insurance premiums for health are through the roof these days. So it's important to have that set up correctly so you're protected in the event that you get sick or have to go to the hospital. Disability insurance is possibly the most looked over type of insurance out there, but this disability insurance protects us in the event that we cannot work. So let's just say we were in a car wreck and disabled. Or more likely, we had a heart attack or got cancer or sprained our back, something of this nature. So what this disability insurance would do would actually step in and pay an income to you depending on how it's set up and limits and whatnot. But it's very important to have disability insurance, and we all should have it, but unfortunately we're not forced to, so most don't. So you might want to check into that, whether it be through your employer or on your own, but disability insurance is very important. Long-term care, also often overlooked many times. There's different ways nowadays to get long-term care, but just understand that as you get older, our bodies start to break down, and we may need long-term care. And long-term care is very expensive, so it's important to either have a way to pay for that, some savings set aside, or long-term care insurance. Life insurance. Life insurance has been sold as a commodity in recent years. We all know that it protects us in the event of our premature death. But there's lots of other uses of life insurance while we're actually alive. So those are some things that you might want to consider. But life insurance, again, is going to step in the event of your death and pay a benefit to your heirs, your family, in the event that you're not there to take care of the bills. So these types of policies protect our assets, our income, and our life. Let's talk about wills and trusts. Very important. Now, I'm not an attorney, nor do I play one on YouTube. So you want to consult with your attorney, with your legal advisors when developing these. So, but here's some things that you might want to be aware of if you don't already. When I meet with families, I find that about 80%, 8 out of 10 of the families I meet with, especially those less than the age of 50, do not have wills and possibly trust put together. So I would encourage you to consider these and speak to your attorney or legal advisor about these things. So the first thing, obviously, we need an executor who's going to follow through with this will when it goes to probate, or you have to meet with an attorney or a judge about this. So the executor is very important. This should be someone that you trust. Oftentimes it's the spouse, but if you're older, it could be the children or another family member, somebody that will follow through and execute what you want to happen. Now, guardians are very important if you have children. So you might want a trust in this situation. So the guardian would watch over the children, and you would provide them with access to, capital, or assets, or income through the trustee. The trustee may watch the money. The guardian may watch the children. Again, if you have children under the age of 18. Now, this could be the same person, but it's a good idea sometimes. Some people are better with money. Some people are better with children. So you just definitely want to make sure that you have these things in place. You also will want an alternate for all of these, a backup. We never know when somebody's going to go, so possibly these people you've named as the executor, guardian, trustee may have passed or moved on. So you want to review and update this regularly, but it's always a good idea to have an alternate and a backup for each one of these particular people that might be helping you in the event that you're not here. Okay, moving on along to asset protection. Now, when I ask people what is their greatest asset, oftentimes I get answers like, my IRA or my home. But seldom do people really think about what their greatest asset really is. And that is their ability to earn an income, or your ability for your family. And, without us or without our family members, things can fall apart. So it's very important to protect our assets. So obviously, we just covered automobile insurance, homeowners insurance, but we also need to protect our savings and our investments, possibly our businesses if we have those. So again, this can come in the form of insurance, but there are also legal things that we can do, entities we can develop. And again, I'm not an attorney, but these are things that you want to speak to your attorney about. And you want to speak to an attorney that specializes in these areas, an estate attorney, a tax attorney. Specifically, you might have an attorney that you work with if you have a business. So you want to make sure that your assets are protected in the event that whatever might happen. When I relate to savings, typically we think of our savings as being safe, right? Maybe it's at the bank, or maybe it's stored in our safe at home. But you want to store them in a place where your money is safe, right? We don't want to lose it. Now, investments, people might say, well, how can I really protect my investments? If I have money in the markets or some place at risk, what can I do to protect them? Well, there are layers, things that you can do to actually layer those investments. Spread it out, put it in other investments first, run it through your own system first, and many ways to do that. So again, protecting our assets is very important, and our primary asset that we should be protecting is our lives. What are you doing to protect your life in the event that you're not there, your income in the event that you're not there for your family? What's really important, if you woke up in the middle of the night and your house was on fire, right now, at this moment, everything is at risk. What would you want to save? It may seem obvious, but think about it. Would it be your family, your assets,
your memories, your legacy. So regardless of what your idea of your greatest asset is, most people think in terms of their financial assets, their money. So we have to think about protecting our savings from inflation, protecting our investments from withdrawal rate risk, sequence of returns risk. But there are many ways that our assets can be lost. They can be lost to lawsuits, divorce, theft, taxes. We have to protect our assets. And if we don't, wealth transfers occur. And of course, the biggest of these wealth transfers is tax risk. There's market risk. And longevity risk is probably the greatest. If we live too long, if we just have a long, healthy life, how will we pay for that? But of course, we could get sick, and we have long-term care risk. So we have to protect ourselves, our family, from wealth transfers. All that we've worked hard to build, to grow, we have to protect these things. Efficiency. When we protect our assets, we reduce our risk. When we protect our assets from onerous taxation, we can reduce our taxes. And when we reduce cost, fees, unnecessary expenses, we create efficiencies. And our belief is that there is more wealth to be had by creating efficiency, by reducing our risk, reducing these headwinds, these things that are stealing our wealth. When talking about efficiency, there's one financial product that's been around for centuries that can give you results for life. All of the things that we talked about, protection, life insurance, protects your family in the event of loss. It's a forced savings plan. It can protect the savings that you have through special riders, waivers of premiums should you become disabled. And your savings can grow over time. And it's the only thing that can guarantee your legacy, that what you want to happen will happen, even if you're not here. So life insurance creates multiple efficiencies, and it's a plan for life. So thank you for joining me today. I hope you gained some value from this video. And if you liked it, please give me a thumbs up. Make sure you subscribe so you'll get our latest videos. And I'll see you in the next video.